This is Inspiring Design, where unique innovators come together to share their knowledge, share their insight, and keep us up to date with the latest industry trends. And here's your host, Rushan Senanayake.
What's up, listeners? Welcome to Inspiring Design. This is where the best of the best brands, experts, change makers, and thought leaders come together to share their valuable insights, experience, and knowledge. Our goal here is to be the missing link between education, design, and the industry. So today's a bit of a fun one, and it's one of my favorite topics actually, and a hell of an exciting one to everyone out there. Investing in the 21st century. And to talk about this topic, I have here with me one hell of a guest, someone that I've been following since 2013. He is arguably one of the most successful property investors in the country. Just at the age of 35, he has over 200 properties in his portfolio worth over $50 million, which produces $500K annually passive income. And not only that, he's the founder and CEO of Binvested, which he started over a decade ago to help current and aspiring property investors to live life on their own terms by using his property investment strategy. So all that, and on top of that, he's well known for his signature thongs, jeans, and white t-shirt, although he's wearing a black t-shirt today. So let's get straight into it. I'm excited, and let's talk about property investing. Welcome to the show, Nathan Birch.
Thank you, mate. Thanks for having me on the show, and look forward to having our chat. I'm excited for this. So, yeah.
That's it. My pleasure. And so can we start off with a little bit of background on yourself? What's your story?
Yeah, so a little bit about where I came from and, why I got into property and all that sort of stuff. I went to school like everyone did, and I realized that I couldn't fit in. I had no friends. I went to 5 different high schools, and I realized that, most people would finish school and they'd be on about 40 grand, 50 grand a year. And I couldn't even hack school. I didn't even like school. I failed every grade from kindergarten to year 12.
Yeah.
And I was told that I was going to be a loser. Like literally teachers would laugh and say, you're going to be a loser. You're going to be working at a scrap yard or whatever.
Wow.
And yeah, I just realized that I didn't want to have to go and waste 40 years of my life working in a job, doing something I didn't want to do. And it was about the age of 13, I got excited by the thought and the process of, teachers telling me that I'm no good at school and all this sort of stuff. And I had calculated a few things, and I thought, if I have to go and earn 50 grand a year for the next 40 years of my life, that's a lot of money. And that'd be like a 70, 80 grand a year job now. And I sort of toyed around with ideas of, property. And I saw my brothers, like I was the youngest of 4 kids. My brothers are like 20 years older than me. At the age of 13, they were buying their first homes and stuff like that. And I was like, I want to buy a house. So I sort of looked at what would be the cheapest house around. And I realized that if I want to replace an income, I need to have 50 grand a year or $1,000 a week coming through as cash flow. And I had this thought. I was working a family business. We were selling goldfish and like an aquarium shop.
Right.
I used to work and earn money from selling goldfish and whatnot. And I thought to myself, if I could buy a property and get to a position of 10 properties by the age of 30, that I wouldn't have to work. And I dedicated not to have to do whatever it takes to get 10 properties by the age of 30. And I thought it was impossible. I came from a blue collar family in Western Sydney. My dad died at the age of 62. I was 16 years old. Never would have expected. Just had a heart attack and died.
Wow.
And I thought to myself, like, this guy worked his life and, worked his backside off, and he was unable to retire because by the time he was ready to retire, he died. And I was like, that seems like, he got ripped off. And I thought to myself, if I can sacrifice a good 10 years of my life to hustle and do whatever it takes, and then I don't have to work, then, it's not a life sentence. And so for me, I worked 2 full-time jobs, bought my first house at the age of 18 in Western Sydney, in a house commission area. Like, I didn't grow up in house commission. A lot of people, all the media say, oh, he's from Mount Druitt or whatever.
Yeah.
But I went out there, bought my first property, and then I had a goal of buying one every year for the next 10 years. I didn't know what to do. There was no internet back in the day. Like, here we are doing a podcast, and back in 99, 2000, I was lucky to have in Carter 96 a CD-ROM to go on my computer, right?
Yeah.
And
Yeah.
information was very different. There was no websites, no YouTube, no realestate.com, no nothing. And I went out and started buying properties. I bought the first one at the age of 18, and then I had to formulate plans and strategies in order to get there. So from that, I bought my first property at the age of 18, Western Sydney. I wanted to get to 10. I thought I was going to fail incredibly. I waited about 12 months to buy my second one, bought my second, third, and fourth, and then went out and bought another 3 or 4 after that. I got stuck at about property number 8. By the age of 24, I was able to quit my job in the middle of the GFC. I understood how money worked and how currency worked, and they don't tell us that at school. So these are some of the things that you got to go looking, because you go to a 12-year indoctrination camp to become a good slave, and people go for the extra 4 years of Pledge of Allegiance to become a tax slave without ever questioning that you're going throughout your whole lifestyle or your whole life trying to chase pieces of paper with dead people on it, right? And it's like, what does that money do? It's it's a trap. And if you look at the origins of where money comes from and work out a strategy, I just treated my property investing like a business, and I was able to retire from the workforce at the age of 24 with 25 properties by the age of 25, and today I'm 35, 10 years on, and I've got over 200 properties. There was one little correction I wanted to make from the start. It's actually 65 million in property now. Yeah, I've got about 18 and a half mil worth of debt. Some people go, "Oh wow, you've got lots of debt."
Yeah.
But if I sold it all,
good debt.
Exactly. It's all about the cash flow, and maybe later on we can talk a bit more about how currency works, how I see debt, how I see debt as a vehicle and an instrument that's crucial for the current economy, especially, and how anyone can sort of use that sort of stuff to get ahead. So.
Yeah, and I think that's the important thing. I do want to go into understanding these different variances, because there's a lot of misunderstandings of what we know property investing or just investing in general was 20 years ago compared to what it is now. So I want to start at a very high level, because we do get students listening in and teachers as well who need to essentially teach this information to their kids. So in your words, at a high level, what is investing?
So for me, investing enabled me to be able to create a cash flow, just for me, to be able to not have to work. So for me, I wanted to replace, if we're all investing, we're investing our time for money.
Yeah.
Right? Most people go throughout life and never question that. People used to laugh at me when I was starting. They're like, you work in 2 jobs, so I go out and enjoy your youth. And now I just have fun all the time. That's why I'm always smiling, always laughing, because I've been able to swap my time and the energy that I've consumed for money. And then it's not actually money, it's currency, and use that currency to go on and purchase assets, which will bring me in further currency. And I've got cash flow coming through on a daily and weekly basis. So I don't have to go to work and exchange another 40 years of my life doing a job that I hate. And I see what I realized when I quit my job is I worked 2 full-time jobs for a period of about 7 years. And I thought to myself, half these jobs that I worked at, if you met the boss at a pub, someone would probably get into a fight, right?
Yeah.
So you have to sit there and obey him and be like, "Oh, yes, sir. No, sir. 3 bags full," right?
Yeah.
And that's a real sad life, because I don't believe at the turn of human evolution, as when we were born and here put on Earth, that we're designed to have a clock and a time and tax. And that's the sad thing that I see people go through life. And for me, I guess when I was able to replace my income and be able to live life on my terms, I've probably gone a bit weird over the years, to be honest, right?
Yeah.
Because the social parameters and the expectations of what society expects from you, you don't have to have that as a pressure. And I see so many people with pressure that's like, you've got to perform, you've got to do this, you've got to do that, you've got to have the house, white picket fence, you've got to get into debt, you've got to buy a car, you've got to get a degree. And, it doesn't have to be that way. Like, you as a person have your own destiny of where you want to go to, and it's that journey that you can go on.
Yeah.
You weren't always think about like back to when I started, and actually when I started the business, I've never asked this question for many years, so you pulled this question out of me. Is if you weren't stuck at your job, if you weren't doing your job, what would you be doing with your time? How would you be contributing to society? How would you be living your days?
Yeah.
And that's your true purpose of what you would want to do. And that changes over time, different chapters and whatnot. But yeah.
Absolutely. And I think that's what's important. I usually follow anything that I'm doing with this statement called become the architect of your own future, which is, given my architectural background, it resonates with me a little bit more. But it's essentially what you're saying. You're not giving into those social norms. You're actually designing whatever the life that you want to and finding ways to do that. Now, there's a lot of misunderstandings of different types of investing. You've obviously killed it in property, but in your expert opinion, what are the different types of assets that people can invest in?
It's changed a lot over the years as well, right?
Definitely.
So this could be a whole new can of worms here that I open up, and a lot of people don't actually look at this, but from my perspective, I see this as being crucial. Our currency that we use, i.e. the dollar bills that are in our pockets, that is what has changed a lot over the last 10 years, 20 years, 30 years, 50 years, 100 years. And I think a lot of the people just obey without questioning that you go to work. I think I've got some in my pocket here with a little clip on it to get cash, right? And that's the elusive cash that everyone goes for.
Yeah.
And the thing is that, the asset classes that are out there. So you've got property. I've done well out of property. I'm not going to plug my business in this, but I created the business Binvested as an investment firm, not just with property, because there's so many different parts of investing that, it's not just confined just to property.
Yeah.
Property is my favorite go-to. However, I try and take all my earned income and stuff like that I've had to go and change my energy for a time and put it into something that's going to create passive income. So the thing I like about property is it has a cash flow perspective and a capital growth perspective. So it's an asset that gets inflated, and inflation is really my best friend. A lot of people think that their house goes up or their unit goes up or their property or their shares. It's not that anything even goes up in time. It's the fact that the money or the currency that we're using is buying less. So you need more of those $100 bills to buy the same thing that you used to in the past. So if we look at, you've got property, you've got shares a lot of people look at, you've got commodities, there's a lot of digital assets now. Yep. You've got Bitcoin, cryptocurrencies, pretty big in that. The day I realized what they were, I laughed at my mate when we first got into them.
Yeah.
About 6-7 years ago, I got into that. And I still own lots and lots of crypto, and I've actually got solar farms and mine this stuff as well, which is a bit out there.
Yeah.
You've got precious metals, gold, silver, other types of assets like that. And one of the biggest assets a different asset class that I see at the moment is being able to control your own food supply, your food supply, what you're going to be eating and stuff. I feel if you look at people like Robert Kiyosaki, you've heard him use this word fate of recent times. We live in a world of fake everything, fake food, fake idols, celebrities, fake media, fake information, and we're feeding ourselves. You go pick up a burger or some food from a shop today, and it just tastes disgusting, right? Yep. It's like it's really, really bad. And I think that having control over your, personal liberty and freedom is crucial. And having assets, you're the asset. If you're just going out getting a job, you've got to wake up every day and earn an active income. If you can swap that time for an active income, buy assets that give you a passive income, then you can use that passive income to live off. And property is my favorite. But yeah.
And I think this takes me to that next question, because it's one of those things that it sounds very simple in principle, right? Because you're literally, instead of trading time for your an income, you're leveraging off some sort of an asset. You're using inflation towards it. So why isn't everyone doing it? What are the skills required, in your opinion, to successfully invest in the 21st century?
Yeah, I think a lot of people don't know what they don't know. And they
Yes.
go to a school, which is an outdated sort of, method of building the humanity. So from what I've understood of humans and, in our learning capacity, when we're a child, we have all these questions. We're inquisitive, right? We're like, oh, can I touch this? Can I put my hand on the hot plate? You burn yourself. You have no sort of opinion of anything.
Yeah.
But as we go through life, we get conformed and put into a system. And I look at a schooling system that we have today, and we have a schooling system where we're just basically pumping out tax slaves. That's in the essence, in the Matrix, they said we're pumping out people to be an energy source, being a Duracell battery, right? They pulled up the battery and said, this is what you are, you're a slave. I feel the system, the whole schooling system has put us into being a tax slave. And we go to school, get a job, but no one really questions. No one goes, hey, hang on a second, it doesn't have to be that way. And I think, a lot of people go searching and the ability, like nowadays, to be able to get access to information. When I first started my business, there was no YouTube. I was like one of the first people on YouTube making YouTube videos with a big camcorder, a massive one, sitting in my car window, driving around. Access to information is much greater now, and people can share ideas and strategies and be able to get information and content, which is far greater than what you can be taught from one person, one textbook that's outdated. So I think if you have an idea or something, there's lots of great people out there that have done great things. If you've got an idea and a concept, you can listen to society and get slapped down, or just keep asking that question until you get the answer that you're looking for. And for me, it wasn't working 40 years in a job. It's like, I think everyone should be questioning yourself. If you could get back that 40 years, if you're 40 and going to retire at 60, you're probably not going to retire at 60. You could retire at 70 now, right? We're living in a world of unknown financial matters, and that's a totally different topic as the world that we're living in today financially. But what can you do today in your own world? The world might be a screwed up place in a lot of circumstances, but your world doesn't have to be. And how can you plan? How can you create strategies? I think one of the biggest things that's been a key driver for keeping me stuck to my goals is having clear defined goals and building out a business plan for my personal life, a 12-month, a 5-year, a 10-year plan, to be able to work out what steps I need to take to get to where I want to be. And I often think about it as a journey. If someone was to go on a trip, I always ask them, like, how would someone get to Perth? And people say, you fly there. Some people I ask and they say, you'd fly here. Some people I'm talking on the other end of the phone, I'm like, you already live in Perth. You don't have to go anywhere, right?
Yep.
Some people might be in Sydney. Some people might be overseas. To get to that destination, you would need every person would need a different vehicle. So if you can identify where it is that you're trying to go to and have that as your, goal, and then work out where you are and what abilities you've got in order to get there, and then work out different strategies on how to get there. Having clarity on that is really crucial to be able to achieve it. Yeah.
And I think that's very valuable advice, because it's going back to one of the episodes, that sheer amount of information that's available right now. This is funny because it was Adam Hudson that mentioned it, going, podcast is actually one of the biggest life hacks, because you are literally learning and hearing the voices of the best people out there. And so this is why it's really cool. And if I'm hearing you right, it's that curiosity. There's no particular skill. It's actually the curiosity to want to know where you want to get to, where you want to be, and then reverse engineering that process. So love that. Very, very clear and concise. Now, something I want to ask you is how, when you're looking at property, because that's where your focus and expertise lies, how do people even begin to learn real estate? Like, at a starting point, if you had to give advice to, let's say, 518-year-olds or 20-year-olds, what would your advice be to them who knows nothing about real estate?
So many people actually, it's good that you're asking that question, backing off what I was just saying beforehand about having the clarity and the strategy of where to go. So many people go out there trying to find the holy grail of buying a property. Like, that is the destination.
Yeah.
But once you can realize that you've got a clear path of where you're trying to go to
Mm-hmm.
and understanding what your parameters are. If you're in New Zealand trying to get to Perth on the other side of Australia, you can't drive there. So if you've got a car, you're going to end in the ocean.
Yeah.
You know, but you need a car if you're on this side of the
True.
journey.
Yeah.
So working out everybody's race is different. Everybody's life is different. Everybody's sort of position is different there. So looking at if you've got clarity on where you're going, you can purchase and acquire the assets in line to get you to that position. So a lot of people will look at the property and think, I've got to buy a property because it's close to this or close to a shop or whatever. The property is probably the least thing on the parameter of what I look for. The strategy is crucial, and knowing that. Then when the property comes to the equation, you've got two parts. If I said, here's a property today, it's amazing, it's worth $1 million, but you can buy it for $500,000, you could be like, cool, I'll buy it, I'll make $500,000. But if you don't have finance for it, then you're never going to do the deal.
Yeah.
If you don't have the deposit or the capital for it, you won't be able to do the deal. So I always think to myself, once you've got the clarity, then it's like, what do I need to do next to get there? How, and when I pick up a property, let's say I pick up a property and go, this one looks really cool. I always question myself, how is this property going to get me to where I want to be? What is the property going to bring to me to the table? A lot of people out there in the past have talked about negative gearing and buying properties for tax reasons and stuff like that. I don't buy it, right? No one would set up a business in order to lose money to get a tax credit. You go bankrupt, right? It's called insolvent.
Yep.
So I don't buy properties that are negative geared. If they're slightly negative, but they're bringing something else to the table, I'll take it for its own merit.
And I think the important thing to clarify there would be negative gearing is a good thing if you're already well established and you want to balance the portfolio. Something that I've learned a little bit the hard way by one of the mentors that I used to have was he was purely running from the negatively geared 80s mentality. And as a first home buyer was advising me and a couple of my friends to actually go and buy negatively geared properties. And I was actually thinking, this is like creating an unnecessary sinkhole in your bank account. Isn't that counterproductive? And this is exactly right. So negatively gearing, you need to actually balance your portfolio later, not at the start. So I'm loving what you're saying.
So let's assume that, if we had any successful business out there in the marketplace, it could be Richard Branson with Virgin, it could be any business. He wouldn't get to a point where he has all these aeroplanes and then goes, oh, let's set up a new business to lose money. He'd be like, how can we get more business, right?
Yeah.
So, and I'm sure at the start he didn't go and set up, rocket ships to start off with. He started with something that was going to bring in cash flow.
Student magazine.
Yeah, exactly. And that's something that, as an investor, you need to look at what is your journey and always relate it back to that. What is your goal? How is this going to help me get there? So the properties for negative gearing, I think that sucks. It's a flawed model. As for positive gearing, I like positive cash flow properties. Are going to put money in my pocket each week. It's going to support my lifestyle. And what I realized in later years of my portfolio, my investing, is that it's not necessarily about the asset naturally itself. It's the whole chessboard that we're playing on. So the currency and our money supply game is rigged. It's set up, rigged, right?
Mm-hmm.
The issuance of currency, and literally in the last 1,000 years, there's been over 10,000 different currencies that have all died via hyperinflation. Dollars, yen, pounds, all different currencies out there. The average one lasts about 30 years. We're actually the longest currency ever, which is the dollar standard that we've got at the moment, which is 49 years old as of the 15th of August, 1971.
Wow.
And we're in the last days of our currency right now. A lot of people think their house has gone up in value, or that, they're so wealthy or so rich, but people feel so poor nowadays, right?
Mm.
So let's go back to 2000, like we're in 2020 now. We can go back to 2010 and even 2000 and go for a walk down memory lane in all our lives. What was a paddle pop? Like, for those that don't know what a paddle pop is, like an ice cream, right? An ice block. How much was an ice block today compared to in the past? I live a fairly healthy lifestyle. I eat organic food, and I used to. I never drank or anything like that. But I used to smoke cigarettes. They're so expensive. You smoke 2 packs a day. I quit a few years ago.
Yeah.
And every time I'd buy a pack of cigarettes, I'd buy an ice block. So 2 ice blocks a day. And they started off in 2008 at about 80 cents a paddle pop. Those paddle pops the ice blocks now sell for about $2.40. Recently, I saw them at $2.50 and even $3. Did the ice block get any better in the last 10 years?
Nope.
Why did the ice block go up in value, right? How much was a can of soft drink going back 10 years ago and 20 years ago? I remember we used to have a little machine, you put 80 cents in and get a can of Coke, right? A can of Pepsi. Now you buy that and it's like $3 or $4. Did they go up in value? No, the currency was devaluing. So they were printing more money, and the more money that they print, the more money you need to buy that same item. I realized at a very early age that this game that we're playing on is rigged in essence, right? So the more money they're printing, the more expensive things go. So if you were to draw a curve here and have the more money printing up, debt becomes irrelevant with inflation. So if you take out $100,000 to buy a property 20 years ago, and that property's worth 500 today, and you still got the 100 grand loan, you can pay that loan off much easier. Because we were talking at the start about how I aspired to have a 40 grand or 50 grand a year income, but the average income now would be like 80 grand. But the cost of goods back in the day, you've got car loans, like going back out in 2008, they used to do this thing called like cash for clunkers. So they'd try and remove all the old cars off the road and get everyone buying cars with car loans. So we've now got all these cars with like 0% or 1% or 2% interest rates on it. It becomes a disposable good. Mortgages, when I bought my first property, I was paying like 7% and went up to 10%. And now we're at the Central Bank of Australia at the time of recording this at 0.25%, right? 3 years ago, I came out and said we're going to see a depression of big biblical proportion. And everyone thought I was totally nuts and lost my mind. And I think we're in the depression of biblical proportions in 2020. And they're printing so much money. Like we've seen in Australia here, almost $1 trillion worth of government debt taken up this year. If everybody's at the limit on debt, if we were to see interest rates go up just 1%, we're at 0.25%. That means it would go up 400% to get back to where it was this time last year. The government would go bankrupt. Everyone would go bankrupt. So we're stuck with this cheap monetary policy. And that's where I'm seeing a lot of growth. And, the more money that goes through that system, the more inflated rents will become, the more inflated ice blocks will become. Go to McDonald's and see what your bill would cost at McDonald's. It's much more expensive in 2020 than what it was in 2008.
Absolutely. And I think that's what's important here. Do you think, this is a very short, sharp question, do you think this information, this type of learning needs to be a dedicated subject in schools?
100% it does. Because people go for 40 years. Well, they go to school for 12 years or 13 years if you calculate kindergarten. And then they go to university for another 4 to 6 years. And then they go for another 40 years if they're lucky and survive that, chasing the elusive dollar bills, right? And at no point along the way does someone say, hey, hang back a minute. How you can get ahead so you're not going to be so stressed in life. Like school doesn't teach you emotional intelligence. It doesn't teach you how to, get through life, eat good food, be holistic as a person. It's teaching you how to be a tax slave. It's teaching you irrelevant things to conform to society's expectations and be a part of the system. And I think a lot of people are waking up to this, but not enough people, because if there was an understanding of how the currency worked, of how monetary system worked, there would be a revolution tomorrow. And I think Henry Ford even talked about that. That was one of his lines. If people understood how currency worked, there'd be a revolution tomorrow. And that's, they don't teach at school. I
And
find it
that's the important thing, because right now we're at that point, like you said, there are people waking up to it, but it's that transition of education and the industry. And while these shifts and changes happen, it's in that fluctuation mode at the moment. So we're kind of in a limbo, neither here nor there. So there's a lot more disparity and confusions and misalignments. Now, one of the things I want to clarify was, earlier we talked about good debt and bad debt, and some people comment about the millions of dollars of debt that you have. Can you clarify exactly what's good debt and what's bad debt?
Yeah. So good debt, bad debt, it's thrown around a lot out there. Good debt, you go and buy an asset that's going to go up in value or do something for you positively. Or bad debt would be buying a new TV on a credit card, or getting a afterpay to buy a suit, or buying a car on a loan.
Assets and liabilities.
It's just a liability, yeah. But for me, I think of it in many more layers than that. Some people say there's bad debt and worse debt, right? Everyone says debt's bad. But if you understand how the currency that we use and the money that we use in our world today, it is all debt. It's a debt-based monetary system. It changed in 1971. It's backed by nothing. It's backed by the faith and the confidence of that system. And it's starting to break down. I look at the debt that I hold, and if I'm taking on debt, and throughout all my businesses, so I've talked about the property portfolio. I've got over 200 properties, over 65 million worth of asset. In my business life, I actually don't even have $1 of debt in any other area of my life. It's just my properties. Those properties bring me in a cash flow every week. I use that cash flow to pay off that debt and to service that debt. And at an interest rate of 0.25%, if I'm getting a 10% return on an investment and I'm paying off 2%, that means there's 8% there to pay maybe some council rates, water rates, as well as leave an income for me to be able to live on.
Yeah.
The debt, I'm paying off in inflated dollars. So I'm paying off today's debt with tomorrow's dollar. So the cash flow is getting inflated. The rents are higher than what they were 10 years ago. The asset prices worth more than what they were 10 years ago. And then you've got this exponential growth in that aspect. That's where I feel like debt can be used from a good perspective. I think debt is perfectly fine. For you to get ahead, I see a lot of people, it is something I realized in the first maybe 5 years of investing, is that people will try and save up money and buy a property with a big chunk of cash. Every time I'd save up 20 grand, the property would go up by 50 grand.
Yeah.
It's not working here, right?
Yeah.
And if we look at, all the businesses around the world, all the governments around the world, all of the organizations, all of the institutions that are out there, they all have debt. Money is debt. If I was to sell off one of my properties and let's say I bought it for 100 grand, I sell it for $1 million, I pay off the 100,000 loan, 900 grand goes to my bank account. Someone has just taken out more debt to buy that asset for $1 million. And when I pay off that 100 grand loan, that 100 grand loan goes back to money heaven and doesn't exist anymore.
Yeah.
It disappears. So I like the matrix, and I like to refer to that a lot in life. And when it comes to investing, like a lot of people out there will talk about a property and, buy a property, do this with the property. Property is great. I love it. It's been very great to me, right? I look at the matrix and think, is it the spoon that bends or is it the mind that bends? And if you can understand how the parameters of the board that we're playing on work, you can understand how to own the whole board and walk away with the whole game.
Yeah. And I think that's what's really cool. One of my mentors, one of the really sayings that I always refer to in my own investing journey is, property is kind of like playing Monopoly, because when you're playing Monopoly with your friends, you come up with really creative things to do deals and combine forces and, combine different property aspects to win the game. And one of my mentors this is when it was a ball drop moment for me, because he basically said, mate, Australian property market is pretty much like playing Monopoly, because if two consenting parties are on, deals on. So you can actually be creative, come up with ideas like you're playing Monopoly. So don't be afraid of it. Just learn the rules and learn those parameters so you can own the board. So this is great. It's all resonating with years of these expert learnings. Now,
Yeah.
one of the things that I think when it comes to good debt and bad debt, it's important for students, especially, to understand the differences between um, assets and liabilities. And I think it goes back to that, what you said, it's connected to the whole thinking outside the social norms, because we can very easily be tempted to, I think, buy a fancy car because it looks cool, it's impressive. You can drive around, it'll make you feel good on a short-term basis, but you're actually hindering yourself long-term. So, and I feel like, again, it goes back to that very first thing you said of understand exactly the clarity of where you want to get to and what those moves are going to do. So love that. Now, I'm mindful of time. I feel like we can talk about this topic for, hours and hours.
I could keep going all day. So
Yeah, me too. It's one of those. That's why I mentioned it is absolutely one of my favorite topics. But to look towards finishing off, what's your advice for students and graduates right now, the ones that are 15 to 22 years old? What's your advice for them?
Okay. So there's a few things that I'm thinking of in my head. So I'll run through them step by step.
Yep.
First one, I read this article maybe about 3 years ago. It was this. I don't watch the media that much nowadays because I see how many lies and stories there are. But there was this article that I saw, and it said that if you're broke in your 20s, that's cool. If you're broke in your 30s, that's sort of okay. But by your mid 30s, generally you're settling down. So if you're 35, you're probably going to find a partner. You might want to have some children, whatever. As you're getting older, you've got more expenses. If you're at home and you're with your mum and dad and you're 18, right? You've normally got 3 square meals a day, clothes wash, whatever, right? You've got a roof over your head. You don't have to worry about all the primitive things that keep us humans, to survive. As you get older, the earlier you can start, the compounding effect that will occur with investing will be more crucial. So have clarity as to where you're going. Look at the assets more as a vehicle and how they're going to help you get to where you want to be. Look at, when I'm buying properties, I want to make sure there's 3 things that I always talk about: buying them below market value, upside for growth, and having a strong cash flow. They're crucial. Minimizes risk, has upside for growth, what I'm buying for, and the cash flow will put money in my pocket every week so I can live on. Society will knock you about, right? Like, people will be told from their friends. I've been told from my family. I've been told from people that care about me, colleagues in the past, all that sort of stuff. You only need one house to live in, right? Why do this? Go out and enjoy your life, right? The property, when you break it back down to just the vehicle, you could have for $500,000 one full Lambo to drive in.
Yep.
You could have 20 Ford Falcons and use them as Ubers. Collect that cash flow, you can then use that to pay for a Lambo, right?
Yep.
And a lot of people just look at the instant gratification of what their choice is today. But having a very clear, detailed strategy will help you ultimately get there. There's other variables, like it can sometimes make it sound very easy. Go buy 10 properties, retire.
Well, you do certainly make it look easy, but I think it's that difference between looking short term and having a long term mentality. And every single one of my mentors, they unanimously shared the fact that you always have to think long term. And there's a very distinct pattern to people who have made it above that normal tax slave life. And I think the hilarious part is there's a very proven formula, and they're all saying the same thing. They just specialize in a different area, like you have with property. So sorry, I didn't mean to cut you off on the thing.
No, that's okay. That's okay. And I think it's being committed to that. Like, once you've got clarity, right? So let's assume that someone's 20 years old today and they're going to start out a life as a tax slave, right? And I say it very hopefully with a smile on my face. Like, because we're all there. I've paid more taxes than most people's family trees would pay in life, right? Like, it's like I've paid a lot of money in tax, and I don't try to do stuff to avoid taxes. I do my decisions based on how my portfolio is going to look.
Mhm.
But if someone's starting out, they're 20 years old, you've got an option, right? That's to work for 40 years, hopefully have a little bit of money left over, may not get to see your children grow up, your partner might have to go to work because you need to pay for the mortgage, struggle to put a roof over your head, etc. Or you could sit there and be like, okay, what would I need to earn to live a modest lifestyle? Index for inflation.
Mhm.
So if you're 15 or 18 or 20 or 30 or even 40 or 50, what would be, and it doesn't matter like at what point in life you're at, there's always a way to be able to protect yourself and move forward. But if you're sitting there thinking, I need 100 grand a year or 80 grand a year, let's say average income 80 grand, 80 grand a year. 80 grand a year divided by 52 weeks is, let's call it $1,600 a week.
Mhm.
So when it finds something that's going to give us $1,600 per week and be indexed for inflation. So I think about it and think, if you were wanting to replace the income of 80 grand a year, what would an average rental of a property be? Well, I pick up properties in Sydney, Brisbane, Perth, all around the country, for 100 grand to 300 grand in capital cities that rent for $300 a week. Say the average rent in Brisbane, I'll pick up properties even today for someone, 150 grand rent for $300 a week. So if you were to get that $1,600 a week divided by $300, so you need 6 and a bit properties. You need 6 properties to retire.
It is easy. That's the problem.
That's all it is, right?
Yeah.
So once you've got, I want 80 grand, break it back down, 6 properties, cash, unencumbered. Then the next part comes is how you're going to buy 6 of them owned outright.
Yeah. Yeah.
So you could either buy 6, work like a dog for the next 40 years, pay heaps of tax, pay all the interest, all that sort of stuff, pay off the properties. Or you could be like, okay, if I bought 12 of those properties for 200 grand or 150 grand, and the market was to double due to natural occurrences of inflation, you could buy double the amount of properties, buy 12, watch the property go from 150 to 300 grand, sell off 6, and pay out the other 6.
Yeah.
As one strategy.
Yeah.
You could look at saying, okay, I want to buy 10 properties that bring me $100 a week coming through. $100 a week times 10 is $1,000 a week, 52 grand a year. The property is just a vehicle to get that result. If you have clarity on the end goal, go find the equation in between to be able to get there. And you don't need, financial advisors out there. Most of them are broke. They're an insurance salesperson or whatever the case may be. They're trying to sell something.
Yeah.
Finding, having access. There's lots of great mentors. There's podcasts. There's like lots of sources out there. Lots of people that are doing things in their relevant field. I'm talking about property. The thing I love about property is that you can take an active income, your business, whatever that may be, and invest it into a passive income. But there's knowledge out there. Don't just sit there and be, told that you can't do something and not explore other options. So, yeah.
That's great. Great advice. And I honestly wish someone had told me those words when I was in my late teens or early 20s. For myself, I had to actually go and find that information, learn for the last 7, 8 years, and actually then put it into practice. So it was a much harder grind, where, like you said, there's so much more information just available. People can just do what they're doing. You just need to look and learn the rules of the game and go forward. Now, one of the last questions I always ask and end with is relating it back to our education system. Yeah. What's your advice for teachers and schools? Because the current teaching system, like we talked about before, is a little bit outdated, but it's in that influx shifting phase. Yeah. And at the same time, the people that are teaching right now are the ones who know the previous generation's mentality. So how do they teach 21st century investing to kids who need to learn it for the next 20 years with previous outdated information? What's your advice for them?
Yeah, good question. I wasn't thinking this one got me started with it, but I'll give you my thoughts on it. And it might be maybe 3 prongs to it. One is, I believe that in a minute of YouTube uploads is like a whole 80 years worth of data.
Wow.
The upload speed, yeah.
Yep.
Yeah, in like a minute worth of upload every minute
Yep.
is like 80 years worth of data.
Wow.
We're 2,000 years into this system. Was there people before? I don't want to go into any sort of religious topic, but let's say that we've just been here for 2,000 years. How many men, women, and children have walked through Earth? They've all got their own, vision of what they can see and how the world has been percepted to them.
Mm-hmm.
Schooling and the teaching system is people sharing stories and theories and whatnot, which is great. But there's so much knowledge out there. None of us have all the answers, right? And for a student, if you don't like the answer, keep seeking, right?
Mm-hmm.
Keep searching for that answer, because someone out there might have had a different way, right? Like we've all lived different lives. We've all got different backgrounds, upbringings and whatnot. So if you're a student, keep searching. If the teacher may not be able to give you the answer you're looking for, don't just take that as gospel. Just keep asking. As a child, we're naturally born to ask questions, to be curious. If you're a teacher, you only know what you know, right? And the system to become a teacher has just taught us that this is what we're to do, to give the information. So now I know there's a lot of teachers out there. I speak to them on a day-to-day basis. I speak to mums, dads, teenagers, 20-year-olds, whatnot, people from all different walks of life. And as a teacher, I see them and they're like, I don't know why I've been teaching this way, right? They're like, all I'm doing is giving a curriculum that's regurgitated. It's like, it's textbook. If you step outside of that as a teacher, you can get into trouble, right?
Yep.
If you, as a teacher, I think researching, learning, questioning the system that you're working in as well, to be like, is this 100% gospel? Is this the right answer? And, if you feel that there could be another way, like be open, like just be open to change. I think we can all learn from, others and be connecting. Ultimately, we're spiritual beings having a human experience here. And there's lots of, people, when people come together and connect, that's where, really cool things come from. So, don't lock yourself out from an opinion. Opinions never pay the bills. Opinions never get us too far in life. So being open to learning is really.
And I think that's what's crucial here, because the teacher has to become the student and consistently learn. So, mate, it's been awesome. Thank you so much for giving up your time.
My pleasure, mate. Thanks for having me on board.
Inspiring indeed, Nathan. So much insight into 21st century investing just on that last half an hour to 45 minutes. But this is a topic that requires hours and hours of time and dedication. So follow what you're doing with Nathan. That's it for today. Now it's time to jump on to rashansandanaika.com/podcast and check out the show notes from today's episode. Click on the direct links and check out the amazing and extraordinary work that Nathan and his team is doing at Binvested in the property scene, and follow him closely. And last but not least, click subscribe and share your love with a review. I'd love to hear your thoughts on today's topic and feedback as well. So thanks so much for tuning in, guys, and till next time.